Hey everybody, thanks so much for tuning into Young Money Investments. Man, okay, what on earth am I doing? Okay, let me just take the crown off here. So it was my it was my birthday this week, and so that is the reason for all of the festivities here. Just getting older, getting wiser, getting more financially secure as well. So I wanted to start today off with some of the happy news, happy good stuff. This has been a great week in terms of trading. I filmed this video actually one time already and my mic wasn't working. This time I'm going to try and be a little bit quicker so it's not 20 minutes long. Today I want to go over the Stock Pick Sunday plays of the week. So we got a couple different categories here, and I kind of started this out. We have our swing trades we're going to be going over today. We have our holds we're going to be going over, and I also have the positions that I am long in currently, or positions that I could see some good long-term value, potentially getting into these companies for the long haul here. So let's start it off here. I'm going to kind of clear off this confetti and everything like that. I don't know why I was so excited to do that with y'all, but I was. So today, what we're going to start off with is we're going to start off with my largest position that I'm currently in right now. I don't know why I got my sunglasses out. I got everything out, but I am excited. So I don't know why. I'm just a happy guy today. So today, what we're going to do is we're going to look at a couple different things. We're going to look at, like I said, the swings, my holds that I don't recommend buying or selling currently, and then the positions that I'm long in. First one, as we get into this could be the other reason I'm super excited. Like, look at this here, guys. So this is my Model 3 that I just designed. Tesla finally let me actually get all of the stuff in place to get my Model 3 all picked out, color, the wheels, I'm going to already throw aftermarket wheels on it, so this doesn't really matter to me. The aero wheels are kind of ugly, but I'm excited. I got the dual motor Tesla as well. I decided not to go with the single motor. With me spending a decent amount of time in Utah, Idaho, Washington, and that's where the car will most likely be. I probably won't be having that car in Louisiana. So I'm not going to want really the rear wheel drive version of this. But that's probably another reason I'm super excited. But let's roll into Stock Pick Sunday. So first position that we are going to take a look at is CAT or Caterpillar. Let me make sure that I got my screen all worked out as well here. Yeah, that looks pretty good. So it's a good decent size, right, guys? Okay, so Caterpillar. I've liked what Caterpillar has been doing lately. I've liked the fact that it is consolidating through here. We saw a nice little bump up above support or resistance, pardon me. We did see it drop back down, and this was kind of a little, I mean, that was a 3% difference kind of right in here. It was quite the swing, but that was when we started to have another, I guess President Trump had talked about $200 billion worth of trade tariffs. That is kind of what caused the issue right there. Hey, good morning, sleepyhead. So that is what caused the dip, but as you can see, Caterpillar is starting to come back up again. This is by far, like I said, my largest position, my largest swing trade that I am taking part in right now. If you're looking to get in on this, what I would look for is a slight dip right now from here, from where it's currently trading, down to the EMA line, about a 1% drop, and then look for a buy. I mean, if you can buy in here, like I said, 1% is not going to make or break you, but if you can buy somewhere in this little price range right here, about 139, 140 even, maybe a 75% dip off, we could definitely see, a nice little bounce play, and then you can ride it up at least to the SMA line. So I'm really liking where it's at, what's going on. The RSI is a little bit higher than what I would obviously normally like to recommend getting into this on, but I do see a lot of value in Caterpillar right now. Next company, and this is going to be my best recommendation right now for what to get into. This company effed me over pretty bad. Definitely effed me over really bad recently. And that was because of this massive sell-off on L Brands, guys. L Brands is the parent company that owns Victoria's Secret. They also own, they own Bath and Body Works as well. So Basically, the earnings came out right in here about what the company was making on Victoria's Secret. They're down 1% ROR or ROY, or what is it, year over year. It's the YOY. The problem with this being down is it's 1%. Bath and Body Works was up 10% on the year, and Bath and Body Works is really the fuel that's driving everything right now. So I highly recommend getting into L Brands right now. I love that the RSI indicator is so low. As you can see in previous patterns here, when it dipped, it came back up. When it dipped down here again on the RSI, boy, Trevor is just making lots of noise over there, isn't he? So you also see a nice little dip as well on here, where it comes up after it took a nice little dip. I see this as a great dip buy potential. And I see a good little swing trade in it. Am I long on L Brands now? That's a good question. I think management needs to focus a little bit more on a couple different things before I would say that I am long on them. Now, am I gonna sell out of my position? No, currently not. But what I am gonna do is I am gonna buy up a little bit more right in here. I'm probably gonna put a few more $1,000 into L Brands because the RSI, because I do see a nice little dip playing, seeing it at least be able to ride up from here till when it catches the EMA line, and that's about a 6.32% return. I see that being possible this week, and so I really like L Brands in terms of a potential swing trade this week. Next company that has also had kind of a sell-off as of recent, and this is one that I've been long in, and so I might be taking a little bit of a short swing trade position in Callaway Golf. So Callaway Golf, as you know, has been a position that I've been in for quite some time. I see support kind of right in here. So just based on previous chart patterns and things like that, it has had quite a sell-off. If you look from where it was trading out up here down to where we're at, we're looking at about a 9 to 10%, actually over 10%, 10 to 11% sell-off on Callaway Golf. Now, a lot of this has been because of trade war and things like that. I still see the fundamentals being great on Eli. I love that it's coming up on support at the SMA. Now, if it does break SMA and does continue to trend down, I see cutting your losses and getting out of this. But this and L Brands are going to be my top two swing trade positions that I'm going to be taking this week. I love that the RSI indicator is trading down here. I see it as a great little potential buy-in. Just be careful. Like I said, just be careful because I do see some resistance kind of coming into play right in this section of it, basically right at about $19. So if you are able to capitalize on swinging this from $18.50, up to at least $19, I think you could definitely see a nice little return, a nice little 6% return in Eli. CPE is another one that I am in one of my smaller accounts. That's Callium Petroleum, I believe is the name of the company. You can see this nice little uptrend pattern. You can see that it's continually uptrending. I like this pattern right here. It's making higher lows than the previous time. And I do see a nice little potential. Do I love where the RSI is at? Not necessarily, but I do think it's going to continue this uptrend pattern. So I do like CPE as well. If you're looking for one more position that you kind of want to get in or maybe at least look at in terms of swing trades this week. Holds that I'm going to be going on and holding this week. Main one is going to be MU. I'm not going to be trading this out. I'm not going to be selling it. I'm most likely going to be looking, though, to potentially cut my losses probably right when we get to cut my losses, looking to take my gains and capitalize on my gains when I get to about the 57.50 mark. So I'm going to look to sell out of this position. I'm about $6,000 to $7,000 in this position. I should be seeing a nice little, probably 10% return on it by the time it gets up into this range. Yeah, I'd say probably 8%, not 10%, 8.5% return on MU. I don't recommend getting in. I don't recommend getting out. RSI just is not at the place where you would want to buy into this company. But if you do see it break this support right here, and you do see it starting to continue to trend up, it might look as a good place to get into Micron. But I got into Micron on a swing trade back when the tariffs and all of the trade war rumors kind of came into play. OLED, is another one that I have done very well in recently, kind of capitalizing on this uptrend pattern. Not looking to sell, not looking to buy. I continue to see value all the way up into the $100 mark. I'm looking at probably another 8% return on it. I just don't recommend buying when you see the stinking RSI up here at about a 66. Just not a good place to buy. We could see a little bit of consolidation and sell off. So I don't recommend getting in, don't recommend getting out of Universal Displays. Long positions, one that I really do recommend this week, probably one of the better ones, is going to be Alibaba. Alibaba is basically the Amazon of China. I think the market in China and the way the communist economy and that kind of thing works, Alibaba runs the show over there. You think Amazon runs the show in America? It's nothing compared to the way Alibaba runs it. The forward PE is really good on Alibaba compared to Amazon. I only continue to see us buying more products from China. I don't believe this trade war stuff is really going to affect us. I think that there's a lot of potential upside in terms of what Alibaba can do. So long term, I do see them as a decent buy. Again, RSI is not at a great place where I'm like, oh, dying to buy like I would have been down here. To be honest, I actually did get in down here a little bit. So that was a nice 3-point-some-odd% return. I think I'm actually up more than that in Alibaba. No, I think I am. It's around that. So about 3 to 4% return. I do see, like I said, long-term writing this up. Short-term potential, you see a nice little 3.77% getting into this where you're going to see support or resistance kind of come up. But I see this as a long-term great potential company to be in for the next couple of years. So Alibaba is one that I'm going to be looking at to most likely take a long-term position in. Tesla, another one that I am long in. I don't know about getting into it up in this price range. I would try and get in somewhere right down here about the 308 price range. 308, 307, if you can get into Tesla in the low 300s, maybe even around 305 would be nice, but 307, 308, not a bad place to get into Tesla. I would average in though if you're going to do it. I like Tesla, especially through September. I believe that they are going to be profitable come September. I like it. I really do like this company. I really do think that they have a whole lot of potential. I'm down probably 3 or 4% right now in Tesla for full disclosure, but I do see good value in them. I also see good value in FedEx. More so just in terms of a long-term position. I think I've went over FedEx and why I like them. RSI a little bit higher than what I'd like necessarily. That's why I think this is a good long-term position if you're looking for long-term holds instead of being a swing trader. Other one is going to be LMT or Lockheed Martin. Lockheed Martin has gotten smashed the past little bit. I like this little bit of support, as you do see down here. I could see a nice little support system kind of forming, and that's actually a horrible line. Let's remove that. Remove drawing. We're going to try and draw it somewhere right in here. Yeah, somewhere right in. There we go. So I like them. I would love to see this kind of bounce off the RSI, bring it, or the EMA, pardon me, get back to about 311. We're at 313. I'd like to see it at about, like I said, 311 as a good buy point. I do see it as a little bit overextended. Obviously, it's creeping above the SMA though, overextended above the EMA. I do think this has potential, like I said, to continually start to trend up. Lockheed Martin is a great long-term company. They pay really good dividends. It's a military defense company. They're going to be getting millions and millions, if not billions of dollars. Well, actually it is billions and billions of dollars from the U.S. government every year. So I like Lockheed Martin. I do think that's another great one to get into. Last one that I'm going to get into is Toll Brothers. So Toll Brothers is a housing company. They make homes. They build high-end luxury homes. RSI, again, not necessarily where I'd love to be, and that's why this is a long-term hold. If you do look at the year chart, if you look at my last video from last week as well, I went over why I see Toll Brothers as a good investment right now. I think that this is a great spot to buy in. You have a great potential for riding it up. I mean, if you do buy in here, and you start riding this up 13, 17. I really do see a nice, a 20% return in this easily. So Toll Brothers, great long-term position if you're looking to get into the housing sector as well. Long-term, I see some great value in them as well. So That is everything, I think, guys. I think that's all that I have in terms of trades for this week. Like I said, kind of to recap, big trades that I see value in. We'll actually hold this up here. Big values, big trades that I see value in. L brands, really being able to dip buy and swing trade L brands right now because of the RSI indicator, because of the massive sell off. The reason they sold off is ludicrous. There's really no reason they should have sold off of the earnings and that kind of thing. I love L brands right now in terms of buying in. Eli Callaway Golf is another one that I probably would say is my second choice in terms of what I would be getting into this week. And again, I see a good long-term swing trade with Caterpillar. They do pay a dividend as well, so if I have to hold them longer than I want, I see some real good potential value for that. I really, honestly and truly, the stock market is good. Things are really good. The economic data is very, very positive right now. So I really hope that you can get into this and kind of see. I do see that the second half of the year, I do think the market is going to continue to go on a hot streak and continue to ride up. So if you are looking to get in, I think these are a couple great plays to get in. If you're looking to add to your portfolio this week, those are what I would add to. If you're looking for swing trades, boom, that's what I get into as well. So thank you so much for tuning into Young Money Investments. There's going to be some what is it? I don't even know what it's called. There's going to be some video, I think, with Bentley, because we're just messing around, but the audio is crap here at the very end. So thank you so much for tuning into Young Money Investments. I hope everyone has a great Sunday, and let's make some money this week. Take care. Talk to you later. You got to come back in the video if you're going to say goodbye. Bye. There we go. Say bye to everybody. So